Trusts are a positive legal vehicle to protect your personal and family assets and mitigate tax imposed by governments. Though there are several types of trusts, they are basically the same in nature. A trust is a separate legal entity, a little like a company but usually set out in a trust deed, with trustees managing the assets granted to beneficiaries by people called the settlers. That's you. LifePartnerWills team have identified 5 ways that trusts can protect your hard-earned estate and preserve your family's inheritance. Firstly, asset protection. Rather than giving assets like your home, investments, money, or prized jewelry to a loved one immediately, it is often better to place the funds into trust, which protects them if there is a change in circumstance of the beneficiary. If they go through a divorce or bankruptcy, fall into hard times and go on benefits, or are pursued in bankruptcy, the assets or funds do not automatically form part of their estate for assessment or recovery. Secondly, care home fees. Trusts can be used to help protect against care fees in certain circumstances. But in order to protect yourself from local governments pursuing, advice and proper planning is needed. Thirdly, reduce or mitigate inheritance tax. As governments seek to take more money from people who have saved through inheritance and capital gains tax, trusts are a solid way of reducing the amount payable, or protecting your tax exemptions, or using current exemptions. This is particularly important if your family home is mortgage-free and in excess of £500,000 for an individual. LifePartnerWills can advise you on how best to plan your estate and use wills to save your family large inheritance bills. Fourthly, retain some control over your assets. Many people's biggest asset is their home, and it's often the target of the biggest inheritance tax bills. A trust can be created to enable you to remain in your home while passing the asset onto a family member and saving on inheritance tax. Fifthly, family wealth planning. If you have a second home or property, shares in a family business, or other investments, a trust can be created to pass those assets down to children or even grandchildren without creating an inheritance tax burden for your children. In today's ever-changing world, where you have, for many years, saved and worked to grow assets to pass to your children, these assets are under threat from government taxation. A trust is a very useful addition to estate planning. Talk to LifePartnerWills today and let us help preserve your wealth for future generations.